This conference will now be recorded.
Good morning, everyone. Thank you for joining me for this pop-up live trading session. The market is open. It's been open for about 15 minutes. And just like what we have been experiencing for most of the last 2.5 months, the NASDAQ is up again this morning. It was pretty much red all morning since I got up at 5 a.m. and it started to go green just before the bell opened, and now it's pretty much on its highs. It's leading the rest of the market up as well. Yesterday, the Nasdaq was down like over 1%, while the other markets were up, and then it reversed and it finished up about 1%. I wouldn't be surprised if the Nasdaq finished down 1% today, and the Russell and the ES and the Dow all follow that direction. But we will see. You've heard me talk about yesterday on the Monday morning briefing that this is a shortened week, and normally the market goes up on a shortened week. If I could go back and do some history on it, I would bet that the market goes up about at least 60% of the time on a shortened week. So maybe that's going to be the case so far. It's already up on the week. It had a big day yesterday, and we will see how today plays out. But I'm betting that it's going to go down today. But I was betting we would be down yesterday. On Sunday night, as I was mentioning on the Monday morning briefing yesterday, I encouraged some people to sell some micro futures, and obviously that didn't go very well yesterday, but it still worked out great because volatility came out of the market. And when I had them sell those micro futures, their deltas were long, so they didn't get short. They just kind of equaled out or flattened out their deltas a little bit. And yesterday, with the market up so big and volatility coming out of the market, they participated very well. Now today, I think that the market is ridiculously high again, and I am still holding a micro future that I put on Sunday night, thinking that yesterday was going to go down, but it didn't go down, obviously. So this morning I am looking at this. I'm still, since I put this micro future on this Russell micro future here, this M2K. I am down $260. It's fluctuating and so forth. So we'll see how that plays out. I didn't want to take it out because the deltas in this account are still fairly flat. So if you look at this here, it's about a delta of -2, -3 overall. So it's not too bad. So I would keep that micro future until the deltas go -6, and then I would probably take off the micro future win or loss. If I'm losing on it, then I would still take it off, and that will take three SPX deltas away. And so if I'm -6, I will go down to -3. So I will stay negative. I want to stay negative because I feel like the risk reward benefits me to be negative deltas. I don't think the market has the capacity, which once again can be completely wrong, can go too much higher, right? This NASDAQ was at what, 13 or 10,300. It's dropped from there. It's about 300 points down. Yesterday it was about 500 to 600 points down at one point from that high. I don't think it can go too much higher than that 10,300. But obviously it could continue, but I'm betting that the risk reward is on my side with that. So I'd rather stay negative delta, especially in this environment, because even if it goes up, it's not going to go up as fast. It's not going to do something like this. So theta is going to outpace the move, I believe. So I will continue to be short, and I would, but you have to have the conviction to do that. I was talking about yesterday that it's a number of people that is part of the trading, the Dorian Way Trading Club, that is really gun shy to sell calls or be short the market, and that's completely understandable. It takes time to get to the point where you're comfortable being short and believe that you can still make money being short. So that's our job at the Dorian Way, to teach you that, show you how that's possible. And once you get that conviction, then you'll be able to do it. But with that said, it's a number of you that are just really afraid to sell the put side, right? Is that maybe you are way too short and you are afraid to put on a put. So it's extremes to both sides. You have to figure out how to do a balance and keep that range of deltas that I talked about in lesson 4, and then we talk about quite often. You have to have a balance, and you have to try to trade delta neutral, and that delta neutral is obviously a range, and you want to stay in that range so that you don't get too long or you don't get too short. I prefer to stay short, so I try not to get too short, but I like to stay with short delta. All right, so we'll see what happens. The Russell is down. It was up yesterday, as you can remember. It was the only thing up for a second, and then everything wind up being up. So we'll see what happens. See if this Dow that's down over 0.5%, the Russell's down over 0.5%, the ES now is down. If these can cause the Nasdaq to go down, or if the Nasdaq once again leads us up, we will see how that plays out. All right, so I sent out some trade ideas this morning, and I wanted to kind of point out a few. Yesterday we were talking about ways to get short the market and ways to sell some naked puts and some stock and so forth. So I sent out some trade ideas on that, and let's go over a few of those really quickly. The first one I was looking at was the ES, and kind of doing a special type of trade in this one. And you can do this type of trade I'm about to recommend in Thinkorswim as one trade on the options on futures. You can't do it as one trade with Tastyworks yet. But looking at 52 days ago, and I'm going to set it up as one trade though so you can see it. Selling a call spread to finance some of buying a put spread. So selling the 33, let me get this correct here, the 3360, selling the 3360, buying the 3400, and getting at least $3 there, or it's half the price of $3, so it's really 150, and then buying a put spread at the 3000 strike. So I like to go at the money, but it just was too expensive at the money when I was looking at this, and then selling the 2980. So when you see this right here, I was talking about doing it for about 375. It's going for a little less than that right now because the market is up. It was a little down before, but you can let it come to you, or you can do it somewhere around this price here, this 150, but you can see that it's going to cost you some extrinsic of 175. So that means it's going to be a net debit of 175 before fees and commissions. But your max profit on this could be you could have a max profit of 825. Your max loss is obviously on the call side. You can lose 2175. So this is a way to double up on your short delta. You're buying a put spread and you are selling a call spread, so you're doubling up on short delta here. And you're trying to get the reason why you're selling this one is to try to get some capital to be able to finance most of this put spread that you're buying. Okay. All right, so that's one trade. Another trade that I was looking at is doing the same thing on the call side, right? Selling the ES here on the call side and doing it for at least 290. It's trading for $3 right now. Taking that premium. So in this case, the premium right now is about 150. It's about 150, and if you take that premium and then you go to the SPY, and in this case you buy a put spread in the SPY 52 days, so the same expiration period, and you buy the 304. This is pretty much at the money, selling the 297, and so you're getting 150. This right here is going to cost 232 basically. So you're not doing it for a credit, but you're doing it for almost flat. It's kind of somewhat a neutral cost for you. So this is a way to to buy a put spread without paying the full price for it, right? And the max profit that you can get on this part is 151, excuse me, 468 if it goes below 297, and you get another 150 you get to add to that on the call side of that ES, because if the ES is going down, this SPY is going down, and you can benefit from this pretty quickly because this is basically at the money here on this SPY. So I like this type of trade here. Interrupt me if you have any questions, or interrupt me if you're interested in doing one of these trades. The next trade that I have this morning was gold. I recommended selling a gold call spread a couple of days ago, and I did that spread, and you can see that this is right now at the 15 delta. I said that this is an indirect way to short the market because this is the market. As the market goes up, gold has been going up, but the market went down yesterday, or excuse me, the market went down on Friday and gold went up, and then gold was basically flat yesterday, and the market is for the most part up today. And I'm talking about the ES and the NASDAQ, and that gold is up as well. So if you had that position on, or if you do not have the position on, maybe you bet that the gold is not going to go too much lower. So I was thinking about selling the 1620, and this is all within the expiration period, right? 57 days, and you know you're not going to keep it that long. So selling the 1620 and buying the 1600 and doing that for 140. It was trading at about 130 at the time. When I was looking at this, it's only 110 now. I would let it come to me. I might even put it at 140 and just let it come to me. If it comes to me, then great. I'm going to actually send this one, and if it comes down, then great. If it doesn't, then no worries. And then I was looking at the Z, some currency this morning. So 6B, we have 6B here, and this is this, you can see that the British pound was going up. Now it's got a downwards track here, and it looks like it's been down for about 3-4 straight days. It's been down for 4 straight days here. So I was looking to sell a put spread in the British pound, betting that it's going to go the other direction. And this is kind of a 38 days to go, so it's diversifying by days to expiration. I was looking at selling the 1.175 and buying the 1.165. Keep in mind, I'm doing all these spreads on that's options on futures in a way that I can easily adjust in concert on this Tastyworks platform. Once again, you don't have that problem on the Thinkorswim platform at this time. All right, so I was looking at doing this at 0.008. It's at 0.006 now. I would put it down to here and let it come to me. And if it comes to me, then great. If not, then no worries. So I like this trade. I'm going to put this one on as well. And if it comes to me, then great. If it doesn't, actually, this is 2 contracts. You want to do 2 contracts of this. So this is, you want to do at least 2 contracts of this, and sending this here and see how that plays out. The next thing I wanted to look at this morning is some stock. And John yesterday was recommending PG, and we looked at it a little bit, and so we're going to look at it again today. I like it. It was down when I was looking at it. It's obviously up now, so that's unfortunate. But I was looking at selling a naked put. This is to own it if you're interested in owning PG at a certain price. Obviously, you can do this as a speculation if you don't want to own it, but I prefer that in this environment you have the capital to own it if you want to do this naked type of put. So I was looking at the 100 strike and then putting it at 100. I wanted to get at least $100 before fees and commissions. It looked like this might have been the case before the market opened, because this was not up. It is up now, but I would put this in just in case we get that reversal that I was talking about earlier. If we get that reversal, it doesn't look like it right now. The NASDAQ is really strong, but I would not be surprised once again if that completely reverses, because it was down, earlier. So maybe we'll get a reverse. It's got the ridiculousness of the Nasdaq has to, in my opinion, go the other direction here soon. With that said, I think this is a great trade. You'll own it at 100 with a cost basis of 99 if you like this. So you have to have at least $9,900 in your account to be able to do this if you want to do this trade. And this is Procter and Gamble. It's a great, obviously a great stable company that's going to be around regardless of COVID-19. And then we were looking at Gilead yesterday with John as well, and I really like this trade that he was looking at, so I'm gonna recommend a naked put in this as well. This was up this morning, but not this much. It's up already $1. So this is not going to be as great of a trade, but I still like it. I was looking at it at 153. It's trading at 122 now. I still like it. You get over $100. You own it, and a cost basis of around 66.50. And so you need $6,600, as you can see in here, and to be able to take ownership of the shares. If it goes below this strike here, it's less than a 19% chance that it will expire below below 2750. So I think this is a great little trade to gain a little income over the next 52 days, and probably most likely not going to have to take ownership of the shares. But if you do want to, there you go, right? You can take ownership at 67.50. All right, so the next trade I was looking at this morning is Exxon, and I was looking at doing a strangle in Exxon this morning with 52 days to go, and selling the 32.50 on the put side, and then on the call side selling the 52.50. So I was looking at it for 100. I would let it come to me. 93 is good as well, but I was looking at it for 100. So if you're interested in doing this trade, I like it. I think that Exxon is probably not going to go to 52.50 within the next 52 days. And once again, you won't stay in that long, or go down to 32.50. We have a 14 delta and a 9 delta. If you just simple math and say there's 24 or 23, it's only a 23%, or you have if you subtract that from 100, you have over a 75% chance of winning on this trade. So I really like this this trade here. And if we look at Exxon on a chart here really quickly, you'll see what it's been doing. So Exxon is obviously not it's not doing that great, but it's off its lows quite a bit, and it's been in a little range, in my opinion, to this point. So we, on the put side, we're very close to the lows. The low was in March was 30.11. We're selling the 32.50. So I think it's a small probability that would be the case within the next 52 days. All right, so the last trade I have is, once again, the monster. I just cannot stop thinking about selling this. It's up again, and it's up big. It was down pre-market, but this is just, once the market opens, people go, it's time to buy. So they're buying this again this morning. So I think this is the most ridiculous stock. It's just crazy. Even though I'm a Tesla car fan, I think this is just ridiculous, this stock. And this is just a reflection of how ridiculous our market is. But I'm thinking about selling the 1500 and buying the 1520. So this is a big trade, right? You had a decent sized account. But that is fine. I was looking, this price is crazy. I wouldn't do it for this 90. This morning it was looking at 265. So I wouldn't do this trade now. So scratch this. This is not worth the risk reward. Even though I don't think it's going to 1500, but I didn't think it would go and stay over 1000 as long as it has. But with that said, I'm going to clear this, and that is the last trade I wanted to talk about. And then I just going to give you a little picture of this account. We did this gold trade on Friday. It's down a little bit, about $30 since we put it on. Gold has basically been flat since then, but it's still I guess the volatility in gold is elevated, so we haven't made any money in that gold yet. I told you about this this micro Russell future that we put on Sunday night, thinking that Monday was going to be a down day, but obviously that did not happen. Once the market opened, we went up again, just like we are today. This natural gas trade is looking awesome. I believe we put this on Friday. This is, and it's already at 58, 60, almost 60% profit. So it's time to ring the register on this. It's only been a short period of time. Natural gas was up 12% yesterday. It's up another 3% today. So this is time to ring the register on this. And let's see if we can get paid. And we're going to send that to close. And then this NASDAQ position, I took off the call side on the NASDAQ. It's just the put side on here. It's only, but it's still it's about $210, as you can see here, premium left in this position. And let me see, it's only about 24, 22% that's been made on the put side here. So I'm going to let that sit a little bit longer, even though it's 17 days to go. It's 17 days to go here, as you can see. I keep putting the wrong brush here. Let me go here. 17 days to go. And so I'm going to look at, if that 15-day rule comes into play, which means if you 15 days or less to expiration and you 3% or closer to at the money, you take your profits or you roll out, but you don't stay in the position. But if you're further away, you can stay in the position to see if you can get a little bit more. So this is way more than 3% away because the short strike is here. So I'm going to wait and see if I can get a little bit more out of that. This Russell is doing pretty good today. It's about 52% profit. It's got some on the call side and some on the put side, but this is most of the position is with 17 days to go. So on the call side, it's about 65% profit. On the put side, it's about 76% profit. I'm going to look to take that off here soon, but I wanted to bake a little bit more. That R2 the NASDAQ is definitely leaning us higher to this point, but I'm not going to get discouraged and thinking it's going to come, we're going to go up. So this is the IWM. It's 17 days to go with at the 147. If I look at that, it's probably somewhere in the 30 delta. So let's check, especially with the IWM up again today. So yeah, so that's a 31 delta. I'm not going to look to adjust that. This was rolled out before, so I'm not going to do anything for this until it hits 45. I just think the market is too high. But hey, it's a short week again, like I mentioned, and it looks like the NASDAQ is leading us up to this point, but maybe after around 10 or noon, the market will come to its senses and sell a little bit, but we will see. All right, so any questions this morning regarding this live pop-up session? Any questions about your account? Anyone needs any assistance this morning? If you do, please unmute your mic and present your question or present your problem. If not, we'll call it quits for this pop-up session. And then keep in mind, on Thursday we have the trading floor. So I encourage you to be a part of that. It starts at 8:30. Come with any trade ideas, any problems that you have. Please share your camera if you can, and let's get to know each other better and learn from each other throughout the process. So, all right. So it looks like the NASDAQ is leading us up. We have the Russell is trying to go green here, and so the Russell and the Dow is the only thing that's not. We'll see if the NASDAQ continues to be strong. It's almost up 1%, which is once again surprising to me. All right, so if we don't have any questions.
Hey, Brian, this is Karthik.
Hey, Karthik.
Yeah,
How you doing this morning?
Can't complain.
Good.
Quick, I got a few questions here. Like, number one is basically a trade idea. Like, I mean, we all expect Q2 results to be bad, right? I think starting with Nike, I think all the analysts have been wrong about things, right? At least with Nike, at least most of them have. So I was wondering, what have you thought about the strategy where we buy a put and then the day before earnings, sell the put, because I believe the day before earnings, the IV really spikes up and then the IV starts going down after the earnings. I don't want to gamble, to sell it after the earnings to see what the earnings is. But before the earnings, the day before the, right?
All right,
Instead
so
of,
you're saying you're saying not just on Nike because it just came out with earnings, but you're saying on any company that you're interested in being short, buy a put on it and then sell the put before earnings, day before earnings.
yes,
Okay.
yes.
Okay.
Because
So the um, the probability of that is going to obviously still depend on your delta that you buy at, which whatever that long strike is. But when earnings are around, the expected move becomes greater and volatility kind of expands when earnings are getting closer and closer. So that one I think will be a hard position to make money on. You probably would not make money on that the um, until the earnings come out and volatility leaves those options, right? The premium comes out of those options. So, but if you want to play that type of game, you can try. But in my opinion, that's what it's going to happen. You're going to lose um, um, on that, or you're going to have to hold it until the earnings come out before you get any type of premium come out of those options, right? Um, and unless it has obviously if it has a down move before earnings, then you can win on that, right? And you can get out before earnings. But if it doesn't have a down move before it, then that obviously then you're gonna have to hold it to after expiration.
yeah, I'm not talking about the intrinsic value. I'm just thinking that the extrinsic value goes up the day before earnings due to volatility. That's what I was trying to target at.
Correct.
Okay, the
So
other,
so with that one, you once again, I think that you're not talking about the intrinsic value. You're talking about how extrinsic value goes up and so forth, but that would affect something that you buy negatively. And but if it's going down before earning, then that obviously you can make money and you can take it off before. But the probabilities are still what it says once you buy it at that delta level. So if you buy it at the money, which that's the lowest I would do, or very close to at the money or a little in the money, so that you can have at least or very close to a 50-50 shot of winning on that put spread. Similar to kind of stuff that I did earlier is that I showed one buying a put spread at on the SPY at the money. Then I showed buying a put spread on the ES a little below at the money. But obviously, I tried to finance some of it, but you can obviously play it as a directional bet and buy the put outright and not worry about selling a call spread or a call to finance it. So that is I like the trade though. I like the idea of playing the earnings right now on some of these, right? But I would be a little bearish on some of these earnings because a number of people thought Nike was going to do. You mentioned that Nike was going to do well because you know people are asked they need to buy running shoes because they can't go to the gym or whatever the case may be. They need gym shoes to walk and all of those kind of things, right? And they are the leader in apparel, athletic apparel, but they got hit. They got hit as well. I mean, I don't think any company, and I'm curious to see how Amazon comes out with their earnings. Is not going to be affected by this situation. But the market is saying nothing is no big deal.
oh, okay, got it.
God, I hope that answered your question, Carter. That was long-winded, and sometimes I just yap for no particular reason, I guess. But um, with that said, anybody else
Got
got
it.
any questions? You got anything else, Kartik? I appreciate the feedback and the question and so forth.
I'm good for today. Thanks.
You're good. Okay. Awesome. Awesome. So once again, the trading floor is on Thursday morning, 8:30 a.m. Central Standard Time. So please be a part of that if you can. Any other questions from anyone? If not,
Hey, does the market close early Thursday?
it does not.
Okay.
I think it's a full day. I'm not 100%, but I'm pretty close to 100% that it doesn't close early on Thursday. I think that the ES might or excuse me, the SPX, you might have Wednesday opportunity, Robert. You might have Wednesday opportunity to do or you will have a Wednesday opportunity to do a day trade, and I believe Thursday might be a day trade opportunity as well. It's gonna.
Yeah. I have 4 days this week.
Okay. Awesome. So how do you get 4 days?
Well, Monday is normal. They give you one on the last day of the month always. That's today. And then Wednesday is normal. Then Thursday is taking the place of Friday.
Oh, okay, interesting. I didn't know about the last day of the month. Interesting. Wow. That's, you just taught me something. I didn't know that they give you that last trade. Since I don't do a lot of day trading, I didn't even know that. So interesting. So they have it today, which is that quarterly expiration. I see what you're talking about. Okay. All right. So are you planning today?
Yes, sir.
Yes, sir. Okay. This is, and they got the ES doing that as well. I actually
Okay.
like that. I like that very much. Like that. Let's do something different. That is not gonna fill, and let's cancel that really quickly. Let's cancel this, and that is pondering on doing a day trade as well. Let me see what this looks like really quickly for everyone. 14 Delta. See what that looks like. $50 at the 30.80. How far is that? 30 points. 5. All right. So let's see here. Let's bring this up a little bit. See if we go up any higher and get at least $50 for it. And let's bring the register. All right. So let's see if we get filled in that. So if we do, then great. If not, no big deal. But thanks for pointing that out, Robert. All right, so that's conclude this morning. I thank everyone for joining for this pop-up live trading session, and I will check with everyone throughout the day. So have a great.
Hey, Robert, this is Charles speaking.
Hey, Charles, how you doing?
Hey, I sent you my info. I wanted to talk to you a little more about the day trade, Robert, or how
Okay.
you do it, or how you go about it. All right.
Okay. Well, you send it to me how?
Through the message.
Oh, okay. Let me see if I can find it.
All right.
I'm not the most computer savvy person here. I'm looking.
Yeah,
I'll
click
tell
on the
you what.
little icon. Click on the little icon on the GoToMeeting type of tool thing that you have. Click on that, and it's going to show like a text symbol almost.
Okay.
Robert, and then you'll
I'm
see.
looking. Okay.
You got it?
I think I have it, but I don't see anything up. More.
If not, is it okay if I send
Yeah.
Charles your email address?
Yeah. So just give me my cell phone number if you know it.
Okay, I'll do that then. Hey Charles,
Okay.
I'll send it to you so you can contact Robert. Okay.
All right. Thank you.
You are very welcome. So, all right, everyone, have a great rest of your day, and we'll talk soon.
Take it easy.
All right, thank you. Bye now.